Hello, everyone, and welcome back to Sudden Wealth. I do hope you're having a wonderful start of the week. You may notice that my voice is a bit short. I did have a huge party over the weekend, so I'm now paying the price for all that fun. You know how it is. By the way, guys, if you do enjoy the content, please consider dropping that like and subscribe. So I wanted to make reference about something that happened, I believe, actually Friday evening, which was the SEC approving the Ethereum futures ETF. So futures and the spot ETF are very different. Futures are derivatives. Derivatives trade with leverage. They actually don't hold. Typically, they don't hold the entirety of the asset. They may hold a bit as collateral, but not much. So it's not the same thing, and this comes after Bitcoin's futures back in December 2017. Now, this is actually positive and bullish long term, but at the moment everything is down, so it doesn't really make a difference what happens. You could have something like Bitcoin solves all the world's troubles, and maybe the whole thing still goes down. And the reason for it is actually quite simple. So you may have heard throughout the year, it was, the regional banks, liquidity crisis, commercial real estate going bad, blah, blah, blah. I always said that things that you think are safe and guaranteed are the ones that hit you the most. Now, Ethereum and the overall crypto market in general is around a bit less, around $1 trillion in value. Now, there is nothing compared to 200 trillion in the stock market and close to 500 or 600 trillion on the bond market. Maybe I'm a bit off on the numbers. Maybe bonds are a bit smaller than stocks as well. But the point being, it's difficult to say because these things change on a daily basis. But the point is that crypto is tiny around it. And I do believe it will become a major asset class in the future, but it's still, to some degree, on its infancy. Now, the futures ETF is always a positive in the sense that it brings credibility to the entirety of the industry. And you may recall that I've mentioned that I had a funny feeling, was completely my funny feeling, if you will, that we would see rumors, not an actual spot ETF, but rumors of a spot ETF, much like the one for Bitcoin, to be suggested for Ethereum, maybe in 2025 or 2026. We'll see if I'm right. It's just a funny feeling. I have no basis for such a prediction and no speculation. It's pure speculation. Now, going back to the whole thing about the commercial real estate and the bank crisis, what did I say a few weeks ago when all these financial experts, all these guys on CNBC were talking about the banks? The banks said no. What hits you is things that you think are guaranteed. So things like China will overtake the US, will become the main economy in the world. There's no stopping China. China will take over the world. I said, yeah, I've heard the same thing about Japan. When everyone is very sure about something, I tend to go to the opposite way. I see a lot of issues with China, and they are becoming more apparent every day. But at the time, China looked like they were coming out of the inflation part and coming out strongly. Said no. I do think they will be a big cause for troubles in the future. Not troubles in terms of fighting or anything. Troubles economically for themselves. The other one that I said is everyone believes that government debt is always extremely safe, that there's no issues with it. My position is different. If rates keep rising over sufficient amount of time, due to the fact that the US government has huge trade deficits and huge budget deficits, that these interest rates will start biting when time comes, after sufficient time. which is exactly what's starting to happen, because there's some big refinancings coming in the Q3 of this year, so at the later part of September. And what did I tell you? The bond market guides all the other markets. So if the bond market starts to showcase a lot of weakness, which it did, you saw that stocks held up for a while, you saw that crypto held up for a while, even precious metals held up for a while, until they all fall the same direction as the bond market. Now, can bonds go down and stocks go up? Yes, but it needs to be on a controllable fashion. What do I mean by that? Maybe bonds go down, I don't know, 5-6%, but over a period of maybe 6 months. That is possible. That just means that bonds are not so attractive at this stage and money is flowing into other asset classes. But when bonds start to fall at the speed and at the rate that they did, now there is a big cause for concern. And that market, the bond market, which is about 3 times bigger than the stock market, guides all the other markets. If you really have turmoil, like you can have weakness is normal, okay? But if you really have turmoil, and I'm talking about something like what you've been seeing now, no, with yields spiking like 20 basis points per day, and the bonds going down from, what was it, 103 to 93 in like 3 weeks or 4 weeks. That is the type of moves which are dramatically down. So that is something to keep an eye for and to check. In my opinion, this is what I'm doing. I'm checking for more so than actually rallies on the bond market, is to check for stability. Then finally, I did mention, and it was a bit eerie because I said we just had vertical moves in stocks. We should have some level of correction because that would be actually healthy for the market. Now, when I said a healthy level of correction, I was talking about 5 to 8, 9%. It's good. It's fine. It's actually positive. And now you have Nasdaq 100 down 7.4%. You have S&P down 5%. You have Dow Jones down about 3%. So in some of these indexes, we should start to see some bounces. Even if we go to 10%, look, it's not that bad because we had huge moves. But more than that, it starts to spell trouble. But the point is, if the bond market keeps falling like crazy, all the other markets, doesn't matter which they are, will also experience issues, in my opinion. So that's what I wanted to say. Quick update on the Ethereum front and on the crypto side. And that's actually extremely bullish for the future. However, due to the fact that the bond market is in the situation that it is today, it doesn't really matter. The good news don't mean much. It's a bit like when things are also going very well, bad news don't matter. Same thing, but on the opposite side. So thank you very much, guys, and I'll catch you in the next one.